The House of Representatives recently passed a very important bill called the Clarity Act relating to cryptocurrencies. It's currently being debated in the Senate, and I'm going to go over a few provisions that specifically have to do with commodity pools. So when I was at the Commodity Futures Trading Commission, I was in the commodity pool group and I wrote several of the rules relating to commodity pools. So this is an area I feel like I can be helpful on. So here's the important provision, Section 103, and it's going to amend the definitions of commodities to include digital commodities, and it's going to cut a few things out. So what does that mean specifically? Okay, so here is the definition of commodity pool operator, and this is what it currently includes. So if you have a pool of assets and you use that pool to trade securities, you would be a mutual fund or a hedge fund. However, if that pool of money is used to trade commodity interest, futures, options, swaps, you would be a commodity pool operator. And it's going to amend that to include digital commodities. So currently, if you have the pool and you trade commodity for future delivery, which is a futures contract, a securities futures contract, security futures product, which is something that's jointly regulated by the SEC and CFTC, a swap, which is what the CFTC regulates, transactions under 2C2C or 2C2D, which are retail foreign currency transactions, commodity options, and leverage transactions under Section 23 of this title. Leverage transactions you don't hear talked about a lot. They were actually before my time, and I was at the commission for 20 years. And my boss explained them to me. He said that they were an area that was rife with fraud, and they came up with a way to regulate them. You had to register as something called a leverage transaction merchant, and the regulations were so onerous that only one entity was ever crazy enough to try to register as that and do business under that model, and they went under. So leverage transactions are still there, but there's no such thing as a leverage transaction merchant anymore. And this last section is somebody who's registered with the commission as a commodity pool operator. So why is that there? If you don't have to register as a commodity pool operator, but you choose to do it anyway, you have to abide by all the rules about commodity pools, including record keeping and registration and things like that. So it's a burden you take on, even if you want to argue later that, hey, I didn't have to register because I was only trading securities. The fact that you did register means that you have to abide by all the rules. So between 2 and 3, you would insert digital commodity. Looks like that would go here. And it does cut some things out. So what does it cut out? If you act as a digital commodity custodian, so if you're trading on an exchange and rather than have your crypto in a cold wallet, the exchange has it, or more likely they outsource it to a different custodian, that person is not operating a commodity pool. Establishing, maintaining inventory for payment or commercial purposes. So you can send crypto with PayPal and several other ways. So if the person is holding it for that purpose and not for trading, you wouldn't be caught up in that. Maintaining or supporting the operation of validating transactions on a blockchain. So if you're a Bitcoin miner or something like that, the fact that you hold crypto wouldn't make you a commodity pool operator, but many other things would. Because, for instance, this says if you operate this through the sale of stock or securities and then you invest in these products. So if you think about the big company that is famous for putting their treasury into crypto, which was MicroStrategy, they raise money through the sale of securities, and then if they are buying crypto, which would now be considered a something that would subject you to a CPO registration, then MicroStrategy would have to register as a CPO. Generally, other than foreign currency, if you are trading in the physical or the spot commodity, you would not register as a CPO. So if I was engaged in buying heating oil because I have a fuel supply company in the Northeast, or if I was buying natural gas because I have a pipeline, generally you wouldn't be a commodity pool operator because you are dealing with the physical commodity. You're not trading derivatives on that. However, when it comes to foreign currency and now digital commodities, holding that in a pooled account would make you a CPO. Is there a way around that? Well, you could go back to Congress and tell them to start over. Well, you could go back to Congress and tell them to start over, but that probably wouldn't work. And there is something that the commission could do. It's by rule or regulation. They can include or exclude somebody within the commodity pool operator definition if they determine that it will effectuate the purposes of this chapter. Has that ever been done before? Sure. Do you know anyone who's ever done it? Sure. You're looking at them. So there is a similar provision when it comes to eligible contract participants, which is here. And at the end of that section, just like at the end of the CPO section, it says that the commission can include somebody else in the term of eligible contract participant by rule, regulation, or order. That's been done twice. So here's the first one, and it's not a rule, regulation, or order. It's actually an interpretation by staff, which is not as good because they can change that at any time. And this was issued by David Aaron, Graham McCall, and Dan Berkowitz. I don't know Graham, but Dan Berkowitz was the general counsel of the CFTC for a long time and eventually became a commissioner. And David Aaron I worked with a lot at the commission, very bright guy, and he actually discussed this with me. And I actually like the term anticipatory ECPs he came up with. It was better than the suggestions I had, but the name he came up with is great. And the first time this was done, which was not an interp, it was an actual commission order. It was something called a single asset development borrower. And a lot of people started using it. And if I knew it was going to be as important as it became, I would have come up with a better name than single asset development borrower. But kudos to Dave because anticipatory ECPs is a great description of what it is. And it's better than the two suggestions I had, which if I remember was inchoate ECPs and transient ECPs. But this is a much better term. So the advantage of a no action or interp is you can get them out a lot quicker. You don't need the 5 people on the commission voting on it. And the drawback is that it's just the opinion of OGC, or in this case DMO as well, and it doesn't bind the commission, and the commission can change their mind at any time and withdraw this at any time. But in the original instance which this was used, this was one that I had worked on, and this was an order issued by the commission, so it's permanent, and they can't go back on that unless the whole commission votes on it. But they used this power here, such other person as the commission shall designate by rule, regulation, or order, to write in these single asset development borrowers and to make a short story even longer. If you are a single asset development borrower, you are a real estate developer, for instance, and you are going to borrow money at a fixed rate. Sorry, you want to borrow money at a fixed rate, but the bank is lending to you at a floating rate, and you do a fixed for floating swap, you would lock in everything and you're good to go. However, until you get the actual loan from the bank or buy the actual building, you don't qualify as an ECP because you don't have enough assets. So how would you get the loan from the bank and then do the swap? You'd be exposed. And if you wanted everything lined up before, you couldn't do that because you wouldn't really qualify as an ECP. But under this order, these single asset development borrowers could be ECPs for purposes of that. And again, my colleagues came up with a much better term, much more memorable, called anticipatory ECPs. So back to crypto. So someone like MicroStrategy, the publicly traded software company that has their treasury in crypto, or other companies, could be considered a commodity pool operator if you inserted digital assets into this definition, because the way it's written, it would include digital commodities, not just derivatives on digital commodities. And unlike the SEC's 40 Act, there is no 40% test where if you cross that, you're an investment company, and if you're below that, you're not. Even one of these under that section could be enough to bring you under that definition unless you fall under one of these exclusions. So generally, the way the Commodity Exchange Act is written, especially the CPO and CT provisions, if you are taking money for engaging in these activities, you would have to register unless you qualify for an exemption or an exclusion, and here are the exclusions. And there are currently no exemptions, but after this passes, the Commission can, by rule or regulation, exclude that from the term. So I have a feeling if this does pass, there's going to be a lot of lobbyists and people at law firms coming to the CFTC, either their old offices on Lafayette Square or where they're moving to in L'Enfant Plaza, and have talks with them about this and try to get that fixed. But just something to be aware of. So if you have any questions about this or any other topics, just leave it below. And if you have something that you would like me to do a video on, leave a comment. Have a great day, everyone. Here's my favorite part, the disclaimer. I'm a lawyer, but I'm not your lawyer. Anything you see on here is for educational and informational purposes only. If you have a specific question about your specific circumstances, seek your own legal counsel for those questions. Nothing here creates an attorney-client relationship between me and you. I am not your lawyer. Okay, got it? Have a great day, everyone.